Hello everybody, welcome to this week's live session, a catch up with what's been going on with the markets and everything else. If you've never attended one of these before, the way it works is I'll have a quick look at some of the major events going on next week, the big news events to watch out for. Then we'll spend most of today on the platform, because clearly there's a lot going on in markets. I'm just making sure that everything's working. Can you just confirm that you can see it all at this end? I'm trying to watch it on a PC here, and I think there's a bit of a delay. It appears to be working. Massive, well, not massive, but bigger than we've been used to sell-offs in stock markets. So that's still really interesting. The decline we saw back in September, that was about, this is the S&P we're looking at, I think that was almost a 6% slide. So far, I think we're about a 7.5% slide from the highs. So it is a bigger decline than we've been used to, but we'll come back to that in a second. Let's just go through some of the housekeeping stuff. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 76.25% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Right, quick look ahead for next week. Clearly, market focus at the moment is inflation. So again, it's another busy week, I think, next week. Tuesday, early hours of Tuesday morning, UK early hours anyway. Australian CPI, so Australian inflation data. Then Wednesday's the big one really for next week. We've got the Canadian interest rate decision, but it's the US interest rate decision in the evening, UK time. And perhaps some hints on what this central bank, the Fed, thinks about inflation, how much longer they think it's going to hang around for. Of course, famously, for much of last year, they were saying they expected inflation to be transitory. And it's proving anything but that. They dropped the transitory word in the last couple of months of last year. So Wednesday night UK time will be a really interesting one. And then Thursday, we've got US GDP. How well or how badly is the US economy doing? So they're, for me, the major events to watch for next week. To find out more about Capital.com, clearly this is our YouTube channel you're on. Go to Capital.com, download a demo account, download the app, open a real account. Any questions after this, drop me an email, david.jones@capital.com. On Twitter, I'm at Jones the Markets. You can find out more about my trading approach by going to jonesthemarkets.com. And of course, follow Capital.com on YouTube, Twitter, and Facebook. If it's the first time watching this, we do regular videos on our YouTube channel. I think oil was one from yesterday. Was it yesterday? Yeah, Thursday, wasn't it? And that order got filled, I think, this morning. On oil. So let's get into the markets anyway and take a look. Let's start with stock markets. I mean, let's just take a step back. This is where we've come from. This is the S&P 500 back to the March lows. And you can see what's going on this month. We started this month really positive. Well, not really positive. It pushed out to fresh all-time highs on the 4th of Jan. That's a positive move. And since then, we've just been in this decline. So a sizable decline, really, for the S&P. Like I said, the decline we had back there was about, I think, 5.5% in September. That was pretty sizable relative to what we've had recently. I mean, clearly, a 5% move is normally not that significant. But because we haven't really had anything in the way of major sell-offs for a lot of last year, and the last quarter of 2020, it does tend to spook people when we get a move like this, and this is where we are. So at the moment, the S&P US markets have just opened, trading. It has traded at its worst levels since October. So we've hit a 3-month low on the S&P. And the question is, as ever, is this a buying opportunity? You know, investors have been really well rewarded for buying the dip over the last year and a half or so. Is it going to be the case this time? Well, it's not the case yet, I think we can say. You know, anyone who's been buying the dip so far is still stuck in the dip. But it is really interesting down here. And I think it will be, let's see how it performs today. Do we get a bit of a recovery today? We've pushed below those December lows, those 4,500 lows. For me, you know, I'm waiting to buy back in, but we're just not seeing enough strength yet for me to be a buyer. I don't want to stand in front of a runaway train when the market, you know, is having some really big moves down. I want to wait for some sort of stability to come back to the market, and we haven't got it yet. But I think it's interesting what's going on here. So for me, it's a market that still feels weak. You know, it tries to rally like yesterday. I think we had a half decent rally for much of yesterday. Oh no, was it the day before? Into about 4 o'clock yesterday, and then you can just see it just gets slammed again. This is the hourly candle for the S&P. So for me at the moment, I am quite happy to sit on my hands when it comes to this market. I offloaded some of my S&P and Nasdaq trackers in my investment account, so not trading, over the last couple of weeks. Not all of them, about a third of it. And I did that back in September. I think I said back in September when we saw the sell-off there. I offloaded a bit there as well, and then bought back in on the way back up. Let's see what happens. Let's see what happens with this. But I mean, it's still weak. You know, I don't think in the short term we can't say it's not a market that's weak, because we've taken that trend line out and we're down at a 3-month low. But let's see if we start to build support ahead of the October lows. October lows are 42.70. That's still 200 points away from where we are now. Let's have a look at, we've really got to get rid of this little Santa hat, haven't we? Nasdaq 100. I mean, the Nasdaq has been lagging the S&P. And the S&P in January of this year hit a fresh all-time high. The Nasdaq's fresh all-time high was back in November. So the Nasdaq had been a bit of a lagger anyway, and has come off. How much has it come off since that all-time high? 16.8 near enough, 14.8. So it's come off 2,000 points from that high, which again, what's that? 10%, about 13% or so, 12, 13%. It's off its November highs. What's interesting for the Nasdaq, we've got this big level for the Nasdaq because it has come off a lot more. It's retreated nearer to some old important support down there. So the old lows from July last year, 14,400, October last year at 14,400, 14,380 as well. And it traded as low as 14.6 today. So it's come within a couple of hundred points of those lows. So I think it's an interesting one to watch next week. Do we see some support coming in? Do we see buyers coming back in? Let's see. Let's see what happens. But some right turbulence in the stock markets at the moment. We'll look at some individual stocks as well. We had, let's have a quick look at Netflix actually. I saw someone mention Netflix in the chat. I mean, Netflix earnings came out last night, absolutely clobbered, down 20%, I think, in the after hours. Yeah, there's the move, and this is a daily chart we're looking at, and it was their outlook for the year ahead. They don't think they're going to be taking on subscribers at the same rate that they have been, and it is quite interesting actually. I wrote something yesterday that lots of companies reporting now over their last year, over the last, let's say 2021, if you're reporting full year earnings, you've got a relatively easy comparison because you're comparing it to 2020, aren't you? And we all know that 2020 was a tough year. But now, as we get further and further into the year, that comparison with all of 2020, when we're looking back, is going to drop off, isn't it? So they're going to have much fairer comparisons. So again, clearly, the likes of Netflix had a boost from the lockdowns, one of the so-called stay-at-home stocks, and and now things are different. I mean, that is pretty brutal. Yesterday, if we look at Wednesday, closes on Wednesday at $514, and here we are below $400, so 20% lower. And again, with me, whilst it can be tempting to be a buyer, I personally do not want to stand in front of a runaway train. I want to see the thing at least stop going down. It's quite interesting, Netflix, from a long-term trend point of view. This is the trend going back to 2016. This is a 5-year trend for Netflix. So it's definitely an interesting one. Again, if I was thinking about buying a stock next week, Netflix would be on my my watch list, because we're getting clobbered back to where we were back then on this 5-year trend. So I think it's a really interesting one to watch. But you can see why, stock markets, and particularly the Nasdaq, are getting hit so hard. We had that thing with Peloton as well, didn't we? I mean, Peloton, again, another darling of the lockdown. I mean, but what a story of a profit's not a profit until you take it. March 2020, $20 a share. Jan 2021, so a year ago, above 165, and here we are at 25. I think they said that they were rebalancing their manufacturing process or something after, I think CNBC reported they were cutting back on manufacturing because they weren't selling stuff. But you can see the effect on the stock. So not surprising when we're seeing tech sector and lots of stocks hit, that we're seeing these indices getting hit so hard. Let's take a look at some other stuff. Now the FTSE is interesting. The FTSE has been defying a little bit the carnage. Clearly, I mean, the FTSE is a different makeup, first of all, to the S&P and the Nasdaq. Obviously, it's more defensive, you could say, and I don't know. I'm sure some of you invest in individual stocks. I've got individual stocks, and some of my stocks have done well in the last few weeks. The likes of Glaxo, there was a bit of a bid for part of their business going on there. But National Grid, boring power company, they've done well. A couple of insurance stocks have done well. So the FTSE's got a different makeup to S&P and massively different to the Nasdaq. So it's perhaps not too surprising that it's defied quite a bit of the carnage. It was only yesterday the FTSE moved to a new high. Not all-time highs, but the highest since about Feb 2020. So the FTSE has been holding up well, and we've had a weaker pound. Weaker pound normally lifts the FTSE. So let's see what happens. But again, I think if the FTSE is still in its trend, if the FTSE sells off from here, it sells off deeper from here. For me, it still looks like a buying opportunity for the FTSE. So I thought that was quite interesting. The FTSE, for once, FTSE is outperforming. And the DAX again, not as hard hit. So perhaps again, a bit more diversified. It has underperformed on the upside though as well over the last 6 months or so, I would say. You can see DAX has been pretty sideways since May of last year. Had the odd poke out to fresh all-time highs, but nothing really sustainable. So again, I think if the DAX gets knocked back, we've got these old lows from the last 6 months, 7 months now, at 14,800. So perhaps it's interesting down there. And finally, the Nikkei. The Nikkei really did do its own thing for much of last year. But again, we've been knocked back on the Nikkei to what has been massive support. 26.8 to 27.2 has been big support. So if I really had to buy one stock market at the moment, perhaps the Nikkei is the one to do based on this range. But I wouldn't. I would wait for things in the US to calm down. I'd wait for at least the market to have a decent rally that takes out the highs of the day before, at the very least. And at the moment in the S&P, that's just not happening. But interesting times in stock markets. But again, a sense of perspective, it looks quite scary close up. But the S&P is still down only about 7.5% from its highs. It's just done it pretty quickly. Right, what we're gonna look at silver for a change now. Now silver, absolute dog of a market last year. Silver price of silver was down, I think, about 12% in 2021. whereas it felt like nearly everything else went up. You don't need to keep spamming the chat with your natural gas and gold, so we will get around to it. Just if it's in there, it's in there. But a great performance off the lows. The silver's up more than 10% off its 7th of January lows. So it's been a really good performer over the last 2 or 3 weeks, perhaps being seen as a bit of a defensive play, perhaps dollar weakness. But again, we need to maintain a sense of perspective. It's only pushed back to where it was at the end of November. I have done a trade on silver this month for my own account. I think I did perhaps 2 trades last year in silver because it was so boring, didn't do any more. But I did do a trade earlier this month, so it has offset some of my losses in the index, or giving back profits in the index. But because we had this big old support for silver down at 21.50, it's been a massive floor for silver since September 2020, and here we are up at $24.50. This will get everyone, all the silver nutcases, excited. It's going to 50. I can't quite see that yet. We've got big hurdle for silver coming up around 25.50. So, but an interesting one to watch, silver, and undoubtedly has been one of the better performing major markets in January. Gold, of course, has done well as well. Not quite as well as silver. Let's take a look at gold. So that's had a bit of a lift. I think, I've got a trade. I think the trade I have in my own account, so not this account, the trade I have, I'm going to have to give you a little bit of a snooze, you who keeps talking about natural gas and spamming the chat. There you go. You're just going to have a little bit of a timeout. Going to sit on your naughty step. So I do have a trade in gold, and I think it's the longest open trade I got. I think I put it on in May of last year or something, and the trend is up. The trend is up in gold. The big trend. We do gold videos pretty regularly on the channel. Going back to August 2018, the big trend is still up for gold. That was the reason for doing the trade. And it's had a bit of a run. We're still, if we bring it in short term, off the August lows, we had that flash crash in gold in August last year. We are still trending higher. So I would be happy to be a buyer of dips on gold. Is there a trade in this account? I'm sure there is. Yeah, there's a couple of trades in this account. So this account has got a couple of trades in from October and November in gold. So for me, still looks mildly positive. I don't think we're going to be threatening the all-time high up at 2,075 anytime soon. But it's drifting higher. We get people are buying the dips. Again, my target would be a run back to those November highs, perhaps 1880 for gold. 1880 to 1920 has been a real problem for gold. If I didn't have a trade on, perhaps I wouldn't be a buyer today. Perhaps I'd wait to see if we get a bit of a pullback. But mildly positive, but not really running away as some people might think because of inflation. Now let's take a look at oil. What a month it has been for oil. I did a trade myself on oil today, and there's a couple of trades running already in this account. So there's a trade from the 6th of December that's up 400 quid, buying at $68, and there's a trade that was filled in the early hours of this morning. That was from yesterday's video. So there's a video on the channel yesterday I did about oil. I put an order in to buy at 83, and it got filled at 10 past 1, 9 minutes past 1 this morning at 83, and the market's 84 and a half at the moment. Now, there's a lot going on with the oil market at the moment. To find out more, watch the video from yesterday. But there is a concern, there's a supply-demand concern. There's a concern that demand for oil is going to outstrip supply this year because the economy continues to recover and expand and everything else. OPEC and OPEC Plus have ramped up production, but Goldman Sachs have come out and said that by the middle of this year, it expects oil inventories, global oil stocks, to be at their lowest levels since the year 2000. So There's a few things. We've had supply disruption in Libya. There was that drone attack in the United Arab Emirates. I think it was earlier this week. So there's a few things that lifted the price of oil. The net result is, yesterday, the oil price, if we flip this over to a weekly chart, traded briefly to its best levels again since October 2014. So we saw 7-year highs plus 7-year highs for oil. It does seem ridiculous. The price of oil this month is up 13%, or it was when I did the video. It does seem ridiculous that, April 2020, famously, the May contract went negative and traded to minus 38. The cash price was down around $11, and here we are, 20 months later, at $84 a barrel, and still rising. So it's really interesting. I mean, a breakout through old highs is normally bullish. I'll show you the trade I did on this account and the trade I did today. For me, the trade, and I spell it out in more detail in yesterday's video, but basically this was the trend for me in oil. This is on the hourly chart from December the 20th. So we're a month into this trend. I had an order to buy at 83, had a little quick look below that trend line, but there's lots of little pockets of support. So for me, it's only if oil starts trading below 80 would I worry about a deeper sell-off. So for me, I'd still favour being a buyer of the dips on oil. I can't quite believe we're going to see $100 a barrel, but it's only $15 away from where we are now. And this is a market that in the last 7 weeks has moved $22 higher. We've seen a 35% move in oil since those December lows. So it is quite incredible. Clearly it's a market very driven by news and expectations about supply and demand. Pretty overbought for fans of the RSI. So there's a 10-day RSI down there, but it did go overbought at the beginning of the month and it's just carried on going up. So it's a really interesting market to watch. So I bought some today for myself at about 83.5, I think, or thereabouts. So we'll see. We'll see where it goes. See if we can get a move on and get back up to 87. And I think if it breaks that high, we've got to start looking at 90 as the next target for oil. So it's really interesting. Crazy market. Oil. Right. Oh, natural gas. Let's look at natural gas. I did a trade on natural gas this month. That's not gone as well as the oil trade. I mean, natural gas, again, was a great market for me last year. I talked about it because of the trend. It was a great market in this account, the account that we use for the videos and the trades we do in the videos, because of this trend that really took off from April of last year. So I bought it this week a bit early. I bought it around about 4, and the market's got knocked back again. But I was buying it because the trend is up. If we go back to, what are those lows? June 2020 lows. So we've got an 18-month uptrend in the price of natural gas. And clearly, it's come massively off those highs. It's not quite halved, but it's down 40% off the highs. But I think, big support down at 3.5. So for me, I was a buyer just to see if we'll have a run up, perhaps at least back to maybe 5.5. Who knows? I did see there was a story today that China is about to flood Europe with liquefied natural gas. So that's definitely not the price back over the last couple of days, if that's the reason. But we're seeing a bit of stability today. So it's another interesting market to watch, I think, the price of natural gas. So we take a look at the cryptos, the crazy world of cryptocurrencies. What? Bitcoin below 40,000. Bitcoin is back to levels not seen since August last year. Have fun staying poor, all the hodlers. This is another interesting one going into next week, though. Again, for me, I've been thinking about, this is a buying opportunity. This sell-off. We were only at 68,000 in November, and here we are, 2.5 months later, and it's down 30 grand. It's down about 40% from those highs. I think what's interesting for me, first of all, is And really the main thing is we are, hurtling back to this big area of support from last year. We saw May through to July last year, 28 to 30,000 was big support for Bitcoin. So personally, I think it can definitely go lower than here. We've got a little bit of support there, coming in about 37. But it's another one, a bit like the S&P, where I think we are going to see a recovery, but I want to see the thing stop going down before I'm a buyer. And the break we saw today is another new low for this down move. So again, it's another one I'll be keeping an eye on next week, see if we get a bit of support coming in. But I don't feel there's any urgency. Was there some news out of Russia this week as well, wasn't there, saying they're going to potentially ban Bitcoin mining? I think I remember seeing that this week as well, and clearly that's not going to help sentiment. So that looks pretty weak still, Bitcoin, but some interesting levels to watch going into next week. If we have a look at Ethereum is again, breaking lower today, but still in that trend from December 2020, as will be Bitcoin. So it's another, I think that there's lots of stuff for me at the moment to watch, but not actually do anything on just yet. Oil for me was an obvious one today because the trend is up, but there's lots of things that, as with Ethereum, the bigger trend is up. The trend over the last couple of months is down. How is it going to resolve itself? But I think it's really interesting to watch. So Ethereum, 2.4 to 2.6 next week could be interesting to watch and see what happens in there. Let's see. Right, I did see someone mention Platinum. Let's have a look at that, because I got a trade on Platinum in my own account, and I do wonder, is it trying to make a base here, Platinum? Again, I've been in the trade, I think, for a long time. But we had this downtrend from May into September, hits 890, rallies, comes back, great little opportunity here, December-ish, holds above the old low, and bang, we're off again. So for me, it does look like a trend reversal in Platinum, and we could see further recovery. I don't know if I'd be a buyer now if I wasn't in already. I might wait for a dip. Of course, the risk is if you wait for a dip and it doesn't happen, you miss the opportunity. But for me, there's an obvious target, November highs around 1100. And if it can break 1100, perhaps things really start to get a move on. But I thought it was interesting how this for me is the perfect sort of setup where it breaks out of a trend but comes back almost bang on the same level and then bounces off again. It's similar to what happened in the dollar index last year. Similar sort of setup. Where we had this trend from the March 2020 highs into here, breaks the trend in Jan, then comes back to it in May, and then really starts moving. So similar sort of setup. While we're on the dollar index, I do still think, we've seen a bit of dollar volatility this month, again because of inflation. So the jury still seems to be out as to whether inflation is going to be good or bad for the US dollar. I would still be leaning to be a buyer of the US dollar index. So for me, if it sold off last week, holds above these old lows at 94.50, I think it's quite an interesting trade. But we'll see what happens. Right, well, that's the normal markers we looked at. So like I say, I think it's a really interesting time. I am tempted with stock markets to think the trend is going to make a comeback, but I don't want to be a buyer yet because the markets are still weak. I want to see a bit of strength, and we're just not getting it for now. Oil still strong, so for me that's still an interesting market. Bought it today, and gold and silver have put in good performances in January. From a longer term point of view, the trend in gold is probably the better one. But let's see how they perform next week. So lots to watch, not so much to do at the moment for me. What I'm going to do now, I'm going to jump into the questions. Just a quick reminder of who we are. So go to Capital.com, open an account. Any questions, drop me an email, david.jones@Capital.com. At Jones the Markets is my Twitter address. And jonesthemarkets.com is my website. And of course, follow us on YouTube, Twitter, and Facebook. Right, let me jump into some of these questions and see. Someone mentioned the Dow, actually. We don't normally look at the Dow, but I looked at it today and I thought it was interesting. Because the Dow, again, because of the makeup, because it's clearly not like the Nasdaq, and it's more like the S&P, but not really like the S&P either. It's a bit more blue chip value stock. So a bit like the FTSE, but not as well as the FTSE. It's weathered this storm perhaps a little bit better than the other indices. So for the Dow, again, just the last couple of days, we're having a look below that trend line. But we've got lots of support running. I think for the Dow, if it starts breaking 33,500, so about 1,000 points lower than where we are now, perhaps the risk is then that we do see a new trend lower. But so it has been hit, but not quite as bad as everything else. Aluminium, someone's mentioned. Let's have a look at aluminium or aluminum for our American viewers. Did we look at it back then in November? You're saying we did, so I guess we did then. Again, that was a good little setup, mate. Breaks out, but actually give it one last chance after it's broken from the trend. Lots of support there. It's interesting that it's struggling again, though. I suppose if you really wanted to go short aluminium, you've got a good reference point. Go short if you think it's going to struggle again ahead of these old highs in October. Go short with the stop above. For me, I'd be sort of a bit wait and see with aluminium, see if it can break the old highs at 32.20. Perhaps it starts to move again then. But while I'm on the topic of commodities, I think I said a few times last year, I didn't believe that inflation was going to be transitory, because if you looked at the commodity markets, they were racing away. And I looked at cotton today. I've missed this latest move in cotton, but I thought, here's a good example, a raw material that's used in so many things. And look what the price of cotton has done. It's just in the last couple of days traded up to its best levels since 2011. So cotton's hit an 11.5-year high this week. And there are lots of everyday commodities. Coffee's another one. I do have a trade on coffee. That had a great run last year, but aren't really weakening this year. So I think, and clearly oil as well, because oil feeds into inflation, obviously. So many of these things are just sticking around near their highs, or perhaps in the case of oil and cotton, making higher highs. I don't think the cost of things are going to get cheaper anytime soon. So I think inflation could continue to be a real problem. Copper. Let's see. Yeah, copper. I think copper had a bit of a move. It's been a bit more volatile this month, isn't it, than we've been used to. I do have a trade on copper as well, and it hasn't done much. I think I probably got in maybe here somewhere on copper. So for me, even though it's fallen out of the trend and it has been pretty uneventful since last summer, I'd still be inclined to be a buyer of dips. It keeps trying, doesn't it, to have a go. It needs to break this 460 level. And then perhaps we get a move back to 480, near 5, that sort of level. It's not that I don't think the most compelling, interesting market at the moment, but I'm sticking with my long, because I think that trend, the big trend, is still just about up, even though it's gone nowhere since August of last year. Singapore dollar, Japanese yen, the old favourite. Let's have a look at that. Singapore dollar, Japanese yen. I remember this being interesting. Oh, yeah, I remember now. Here we go. Oh, it was right on that level, wasn't it? Right on that, what was that? 4-year high at 85.80. I mean, the trend is still up, isn't it? But I'm sure I would have said last time round, if you really want to go short up here, it's a great place to go short, because you've got a good reference point, haven't you? And clearly it's broken down a bit. I mean, the trend is up, but we've got a big hurdle there, haven't we? But I think it is an interesting one up here. If it got knocked back to 83, I'd be tempted to be a buyer again. But it's a really interesting market up here, and clearly 85.80 continues to be something of a barrier for the Singapore dollar against the Japanese yen. Virgin Galactic. Oh, this is just nuts, this one, isn't it? I'm going to reckon it's not doing very well, but let's have a look, is my guess. Because I haven't seen any news. It seems a very news-driven stock, this. I mean, it did well at a bit of a run last year on the test flight that he did. If you don't know, Virgin Galactic is Richard Branson's, what is it, space public transport company. And it's I mean, it's just crazy. It's a crazy stock. Again, I know I say this quite a bit. I've got no interest in stocks like this because, you know, you're in them and hopefully it explodes and you get out. I suppose it's interesting where it is now. It's trading at $8.80, which is pretty much its lowest level since it came to the market. So if it was going to turn around anywhere, then we're pretty much here. But for me, you know, from a trend point of view, it's pretty clear what the trend for the last 4 months is, and it's not up. So for me, I don't have no interest in being a buyer, but it's interesting because we're down here. I would think if it starts breaking much lower than where it is now, we could see a bit more of an accelerated sell-off with people just throwing in the towel if it dips below the low following the IPO. So it's interesting. Let's come back to it in a couple of weeks and see if it's perked up, but it's not one for me, Virgin Galactic. BTI has been on a huge rally since November. What's BTI? BTI. British American Tobacco. I've got those. Is that the one you mean? In US dollars. I've got those in the UK actually. Or is it something else? If you can put the name in rather than the code. That's the US listing. And they have had a run. Because again, it's defensives. Like you say, it's defensive. So if you look at the UK listing, the reason I know it's doing well is because it's one in my ISA. And you're right, it's had an absolutely crazy run since November, from £25 to £32. What's that? 25%? Is it 25%? Something like that. And it's been pretty sideways since then. So, not surprising, the size of the move actually is surprising. But considering the market we've seen this month, we would expect defensive stocks, utilities, insurance, tobacco, people are going to smoke more because their portfolio is losing money, to do well. You know, so I'm in these already. I don't know if I wouldn't be a buyer up here personally because I wouldn't know where to put my stop loss. But I think it's interesting how some of these defensive stocks have performed. Nvidia. We've got a video coming out this weekend actually on our channel where we look at some tech stocks. We look at 5 interesting tech stocks for 2022. And I think Nvidia is one of them. Oh, it disappeared. I mean, Nvidia, again, great year last year, Nvidia. Chip shortage, as we know, not many cars getting built around the world, for example, one industry affected by the chip shortage. I was trying to buy a desktop PC last year and it seemed every other PC was out of stock, chip shortage. Hit hard recently. We saw all-time highs for Nvidia at 340 in November, 346, and they're 236 today. So they're off 20% and a bit more from those highs. So this is another one for me. The big trend is up, but the more intermediate trend is still down. So for me, it's a watch it and see what happens stock. So I'd be expecting a bit of strength to come back in, but personally, I wouldn't be a buyer just yet. But loads of support coming in potentially at 180 to 200 for Nvidia. So let's see what happens. And AMD, let's take a look at AMD, as you mentioned it. AMD, is it that one there? Yeah, Advanced Micro Devices. And again, with that one, it's another one. Let's get rid of that line. It's another one where the shorter term trend from May of last year still up, and we're bang on it again. So this is another. It's again stacking up with interesting things to keep an eye on next week, but ones that I wouldn't do anything with at the moment because the move against the trend is still going on. But that's another one where, again, lots of support coming in from 100 to where we are now, pretty much. So perhaps we will see a bit of strength coming back into these things. Why is the platform limiting the distance of my stop loss from my entry point? It's too tight, I can't make a trade. I don't know why you'd get that. I don't get that. If I wanted to trade Nasdaq, I think it might be because you haven't got enough money in your account to cover the loss. Let's see, if I wanted to buy the Nasdaq and if I said, I've got a short on the Nasdaq at the moment, haven't I? Let's say I want to sell the Nasdaq and I want to sell 1,000. It won't let me do that because I haven't got enough money in the account. Sell 30, 28. And put a stop loss at, I don't know, 90,000. Price level is too high. It's probably to do with the balance of your account, so you might need to put more money in to cover the risk, but normally it should be all right. Where is that Nasdaq short? Oh, there we go. I remember I did it in the video on the Nasdaq a couple of weeks ago, and there was a few comments saying you're crazy. I said, oh, there you go. Who's laughing now? It was an order to sell, I think, if it broke below 15,150. And that was with a wide stop loss, because clearly it's been a volatile market. But we'll see. We'll see what happens. We did copper, didn't we? Do you think it's right to invest in Pfizer? Well, that's the decision for you. But let's take a look at the chart. I mean, so it's been a bit of a strange one, Pfizer. I mean, again, for me, that trend is up. I think we have looked at this a few times, haven't we? In the live streams, the trend is up in Pfizer. So again, like all of these stocks and markets we've seen today, where the trend is up, but the trend at the moment is down, I've been waiting to see if there was a buying opportunity. So if I was a buyer now at 53.60, the closest I'd have my stop, the other side of this spiky low on the 8th of December, down at 49, below there. I mean, it's had a calmer couple of days, Pfizer, than some other stocks, hasn't it? Tesla, let's have a look at Tesla. I think Tesla's a bit boring at the moment, Tesla. I mean, volatile day to day, but that big trend that we always look at when we take a look at Tesla, and I've picked up on it here from May of last year. The big trend is still up. So for me, I'd be looking to buy a dip. I think I said last time round I wanted to be a buyer at 1,000, and I thought I'd missed it. I think I'm getting another chance if I want to now, because it's below $1,000 a share. So again, for me, this is another one where the big trend is up, but it's still pretty weak. Let's see what happens. Lots of support coming in, about 850, 900 for Tesla. Let's see. But clearly, if markets do continue to fall off a cliff, most of these stocks are not going to be immune to that. They're going to be dragged down with it as well, which makes it an interesting time, but also for me makes it the reason why I'm quite happy to sit it out for at least a few days and see what happens. Hershey Company chocolate. Why is that not coming back? I think we're back, aren't we? If you can confirm, it seems to be okay. I've got the most reliable internet. I've got the fastest internet I've ever had at home from hyper optic, like 150 gig or something like that, and it's really reliable. This is the first time in 6 months I've known it to go down. It just went completely, but we're back. There we go. Right, we found this brilliant stock, and I got knocked off. It's quite incredible, that performance by Hershey. Again, perhaps it's a defensive thing again, but what's it up so far this year? So it closed at 193. It's at 202. It's up $9. It's up about 5%, 4 or 5% this year. So that's it's a really interesting start there. So again, the old chocolate company. It's my weak jokes, isn't it, that made my internet die about us eating our way through a bear market. Great trends in Hershey. You know, some good breakouts on the way up. Breakout here in April of last year, breaking these old pretty major highs from 2019 and 2020. Breakout again in early December. Again, these were quite the barrier, weren't they? This sort of 183 area, and off it goes. And we're at all-time highs or multi-year highs. Yeah, it probably is all-time highs looking at that. So yeah, great one. Buy the dip. Or if I was a buyer now, the absolute closest I'd want my stop would be the other side of 192 for Hershey. But no, that's a really interesting one, that. Someone else. I think we'll soon see a stock market crash, and then the central banks will have to print massive amounts of money again. Then inflation will really explode. That would be a disaster, wouldn't it? Can you imagine? Just as they're turning the taps off, they decide they have to do QE. It'd be very messy. Right, what else have we got? Do you think base metals will fall with the Chinese New Year and Winter Olympics coming up? I've got no idea why the Chinese New Year and Winter Olympics would affect base metals, to be perfectly honest with you. So for me, I would just go with what the market's doing. Palladium, let's have a look at Palladium. That had been a really poor performer, hadn't it? But I do wonder, like platinum, when we looked at platinum a bit earlier on, is it having a bit of a reversal moment? You know, we've got I would still be tempted to go short. I'd have one last chance at selling short Palladium with a stop above 2200 personally, but clearly no one's got a crystal ball. But I think it's interesting that the last 3 days it's broken out of that downtrend, hasn't it? So let's see what happens. JP Morgan. I did a video on that this week. I think he got stopped out actually on that. I think I was a buyer of the dip on JP Morgan, only because if I was doing it with my own money, I'd have waited. But whenever we do a video on the channel, I always like to put a trade on. So I think we did the video earlier this week, and it was at 153, and I think I put an order in to buy at 150 with a stop at 145. I think so. I've probably been stopped out. Yeah, I've been stopped out. I mean, again, it's another one, isn't it, where the big trend is still up. They had, I think, a disappointing outlook last week. That big trend is still up. They had accelerated quite a way away from their trend line. But do we see a bit of stability coming? Let's wait and see. Let's have a quick look at what the stock market indices are doing. Let's have a quick look at the S&P. See how today is shaping up so far. It's still weak again. Look at this. Here we go again. So just in the last 5 minutes, the S&P has moved to its lowest for that move down, or the lowest for the year. So it's still pretty weak, that one. Pound against the dollar. Pat, I don't have a trade on, but I was waiting if we'd get a bit of a rally to go short. So I was watching it this week because we've got this downtrend from June of last year. It broke above this week, and I thought, right, it's going to sell off. If it can just squeeze up again and run out of steam, I'm going to go short. But it has so far just turned around. So I still think the trend is down for pound against the dollar. So personally, I'd still be looking to be a seller. I mean, it had a great run off from the 20th of December from 132 to above 137. For me, personally, the trade setup next week will be for a pushback and then a run out of steam. So a better level to get short. So we'll see. Swiss franc against the yen. Swiss yen. I mean, it's a good longer term uptrend, isn't it? Good longer term uptrend. So for me, I would still be inclined to be a buyer of dips for me. If I was a buyer today, the closest I'd have my stop, the other side of 122, which is pretty much ties up with what you're saying, doesn't it? So for me, yeah, I'd still be favouring a buyer of dips. And we looked at Hershey, and I think that's it. I think we're all caught up, aren't we? For some reason, my chat isn't working here, so I can't see anything that's come on since after I connected. So we've done a bit of a catch-up. So what I'm going to do, I'm going to wrap things up there. Sorry for the little technical glitch. And what I would say, these are crazy markets, really, the last few weeks, and we haven't seen crazy markets for a while. So, you know, risk management and all of that sort of thing is even more important than it usually is. A lot of people will have lost some money, even more than usual, over the last few weeks. So, you know, if you're not sure, sitting on your hands and doing nothing is not a bad thing to do at all. You know, and we're seeing again, you know, so far at least, we're only in the first hour of US trading, but weaker markets again in the US. It makes for an interesting week next week. I'll come back next Friday, do it all again. To find out more, go to Capital.com. Any questions, drop me an email, david.jones@Capital.com. At Jones the Markets on Twitter. JonesTheMarkets.com is the website. Details on my training course there. And follow us on YouTube, Twitter and Facebook. And we've got this video going out over the weekend on 5 tech stocks to watch. They might have a tougher year than we first thought when we were putting it together.